All right, welcome to The Explainer. Today, we're uncapping the results from Coca-Cola's latest quarterly report, and we're going to do it in just about 5 minutes. Okay, let's dive right in. The CEO, James Quincy, is kind of setting the stage here, talking about a challenging environment, but saying they've stayed flexible and invested in growth. That's the official word, right? But the real question is, do the numbers actually back that up? So first up, let's look at the big numbers, starting with the top line. Net revenues grew a really solid 5%, which pushed them over $12 billion for the quarter. Not a bad start at all. But here, this is where things get wild. Operating income, the profit they're actually making from their main business, it saw a massive 59% jump. That is just a huge sign of some serious profitability. And this is the one investors are always watching. Earnings per share shot up an impressive 30%. So yeah, revenues are up, but their profitability is way, way up. So the big question is, how did they do it? So how in the world did Coca-Cola pull off these numbers? Well, that's what we're going to unpack. We'll start with a quick snapshot, then we'll look at their growth formula, see how it played out across the globe, peek inside their portfolio beyond just classic Coke, and finally, see what they're planning for the rest of the year. So long story short, this quarter really shows a company that's navigating a pretty tough market and not just surviving, but actually gaining market share in that huge non-alcoholic drink space. All right, that's the 30,000-foot view. Now for what I think is the most interesting part, their growth formula. Because the real story here isn't just that they grew, it's how they did it. And here's the real puzzle. The total amount of drinks they sold, what they call unit case volume, was only up 1%. That's barely a fizzle. So if people aren't really drinking a whole lot more, where did all that extra revenue come from? And here is the answer. I mean, just look at this chart. The growth wasn't from selling more syrup and concentrate to their bottlers. That was totally flat. Almost all of it came from this 6% gain in something they call price/mix. So what on earth is price/mix? Well, think of it this way. It just means Coke is making more money on every single drink they sell. And they do that in a couple of ways, either by just plain raising prices or by getting us to buy more premium stuff, like smaller, more expensive glass bottles instead of the big plastic ones. Now, you're going to see this term organic revenue pop up a lot in their reports. It's basically just a way for them to filter out all the noise from things like changing currency values or buying other companies. It just gives us a much clearer picture of how the actual core business is doing, which in this case was up a strong 6%. Okay, so now let's see how this whole price and mix strategy actually worked out around the world. This table is fascinating because it basically shows two different stories playing out. Look at Europe, the Middle East, and Africa. They grew by selling more stuff. Volume was up 4%. But now look at Asia Pacific. Volume there was actually down 1%, but their revenue grew an incredible 7%. That is that price/mix strategy we were just talking about working its magic. But, this whole growth story isn't just about that classic red can of Coke. To really get what's going on, we need to look inside their whole portfolio of drinks. When you break it down by what people are actually drinking, you see a really clear shift. The traditional sparkling soft drinks like Coke were flat. The real growth engine was the waters, sports, coffee, and tea category. That whole group grew by 3%. It just goes to show how much our tastes are changing. So let's zoom in on a couple of real standouts from their lineup. First up, you've got the absolute star of the show, Coca-Cola Zero Sugar. It's just continuing its incredible run, with its volume growing a massive 14% across every single region. And then there's their power play in the super competitive sports drink market. By teaming up the old school Powerade brand with a super popular body armor, they're actually managing to take on their rivals and grow their slice of the pie. So after a quarter this strong, you've got to wonder, what do they think is going to happen for the rest of the year? Well, looking ahead, the company seems pretty confident. They're sticking to their original forecast for the full year, and they're still expecting strong organic revenue and earnings growth. It really suggests they believe this strategy they've got is going to keep working, at least for now. So when you boil it all down, Coca-Cola's growth right now is a story about price, not volume. And that leaves us with one big question to think about. In this challenging economy, how long can that strategy continue to fizz?